Trade Genius.
Hey guys, welcome to another edition of the Trade Genius podcast. Philip here, along with Bob Kudla, as always. And so today, up day in the markets. Friday looked horrible, closing back on the 200 weekly moving average. However, we kind of felt that we weren't really in too much trouble because the Fed was pouring a bunch of liquidity back into the system. Our newsletter subscribers saw that plain as day. And but there's a lot of volatility. This market is not acting right, and the culprit is you know who, the Fed. So Bob, to that point, and we're gonna get into the Fed a little bit more today. Get us into what's going on with the Fed and how they're basically not doing us any favors.
Yeah, so just to finish your point is oil's up, gold's up, stock market up today. That actually has the fingerprints of the Fed all over it. And just so you guys know too, last week we talked about there is going to be a push higher seasonally into the midterms, and that looks like to be playing out. And to Phil's point is Friday looks so horrible because Thursday looks so good, and now we're getting that follow through. But if it continues to go this way, we should have a couple really good weeks. Now, having said that, one of the charts I wanted to give Phil, but I didn't look at the weekend. I was looking at the dollar. You know, the dollar is still making a lower high. It pushed higher a couple weeks ago, and it's kind of struggling, has some divergences in it. And I think also now you can start seeing with what happened to the United Kingdom, a blow up there, and now the Swiss central bank is now requesting money from the Fed through swap lines. So behind the scenes, they're getting a little nervous. And I just want to throw some charts up here real quick. You can see that the Fed is absolutely blowing the world up right now. It's really interesting. So you have a situation now, it's really impacting people. You know, they say they want to fight inflation, but they're only fighting inflation in the United States. They're absolutely crushing the emerging markets and even Europe. You know, if you look at, because the dollar's been so relentless, you have now ports around the world that aren't offloading food or locking it in warehouses because they're not being paid because the local currencies are collapsing against the dollar. And you remember the Arab Spring in 2011? This is kind of one of those currency imbalances that caused it. 2011 was a different problem. The dollar was getting too weak too fast. Now it's getting too strong too fast, and other countries can't play ball. This is one of the outcomes of that. And the next chart I think we're going to show us is similar to that. Is that people literally are eating less now, literally, and because they can't afford it. They took it to a point now where people food, rent, energy, and medical. And in some countries around the world, rents are 50% of income, so there's very little left for food. And so, we're going to go from a crisis to a catastrophe in the third world, and I'm sure this is going to put a lot of political pressure on the Fed. You saw that United Nations actually said something, saying the Fed needs to lower interest rates. So I quite don't understand the Fed's game on this. They're just gung ho about this, like gung ho. So there has to be something behind the scenes that the Fed is trying to kill, and it could be the dragon bear, they want to do a competing currency, and the United States government says, hey, hold my beer. You want to see what it looks like? Let us show you what a strong dollar looks like. And so that's the only thing I can think of. But at some point now, I think it's reaching a point where it's becoming counterproductive to worldwide relations, and I think the retaliation could be too much. Check this one out on oil too. So United States year over year oil, believe it or not, year over year price of crude oil is essentially flat, up 4%. Okay. And you have around the world though, look at that. That's all currency related. If you could see these charts, it's simply amazing how much you look at Turkey, you're paying 50% of your income in 50% increase in oil. And even the best situation here is, Japan at 15%. So this is all premium based on their currencies. And What's interesting, and the other thing too, we might be trying to break all these mercantilist countries too, saying, hey, your currencies are undervalued. You gotta revalue your currencies. You're gonna have to change your mix of economic policies. But this is pretty brutal on countries around the world.
Yeah, really interesting stuff, Bob. Okay, so that brings us to this next chart, largest destruction of wealth in modern history. Talk us through this one.
Yeah, so typically people protect themselves through what's called a 60-40 typical hedge fund mix, where you're 60% invested in stocks, 40% invested in bonds. The bonds are supposed to support the stock market. The yields are supposed to support the bonds when the stocks are high, but the bonds are not. But because the Fed did a double whammy, they lifted the dollar, they lifted rates, and at the same time they started shrinking off their balance sheet. And then because the dollar was so strong around the world, countries around the world had to start selling off their most liquid assets, which are their bonds and treasury bonds particularly. So it created a feedback loop and basically blew up everybody with these 60-40 bond portfolios. And you guys remember just a week or so ago, the United Kingdom with the gilts, right? They had to intervene actually into the markets because the Fed's policy, the strong dollar policy, started blowing up their closest ally.
Right.
And then on Friday, obviously we had the situation with Swiss National Bank and swap lines. I think we're going to talk maybe more about some of that stuff later in the week, but we're at a point now where not only are we destroying third world nations, we're starting to blow up our allies. And also this chart here these are all rich people, okay? Rich people own stocks, okay, and real estate. Poor people do not. And those people have a tendency to influence policy. And I imagine that they're going to be engaging very soon here. And I think you're going to feel the pressure on the Federal Reserve here to mix their policies. And I know one of the questions you always like to ask me is like, hey, is this it? But I don't think so. I think probably it's going to go to we'll get some relent here, with the market lift. And then I think going into the first quarter next year, we're going to have a situation with going into recession, people naturally run to the dollar. And then I think that'll probably do it. And then everybody and their brother are going to be trying to sell the dollar off and try to stabilize currencies around the world.
Yeah. So thinking about the destruction in currency values, internationally, because I think that's the biggest takeaway from what you've shared with us today, right?
That's right.
Is how does that long term, or let's just say over the next 12 to 24 months, how does that currency destruction internationally, how does that affect us and our portfolios here at home?
Yeah, so the interesting thing about it is short-term pain, long-term gain economically for us, because we're forcing countries now to abandon mercantilism, and then we're going to see more onshoring. So we're going to see higher nominal inflation over time, but we're going to also keep seeing higher wages and higher GDP. And basically, your portfolio should be shifting over to more of a commodity-based, a hard asset-based kind of approach versus just financialization. And if you're in that situation, you're going to be doing just fine. But from an economic standpoint, I think the United States is going to come out of this looking pretty good. The rest of the world, not so much. And I think this is going to be something that I will talk about a little bit more as the week goes on, because there's actually a plan and a path. And there's some people that have been doing a lot deeper thinking with a lot better information than I have that they put out there to the public. Then I'm going to take bits and pieces of that and kind of show people what I think the plan is and how to prepare for it. And I think it's one we all can live with.
Awesome. We'll look forward to that. All right. Well, that's going to do it for this podcast, guys. Thanks so much for listening in and watching. And please hit like and subscribe. That really helps us out. And we'll see you on the next one. Thanks, Bob, for your information today. Really appreciate it.
I think so.
Take care, guys. Bye-bye.
Trade Genius.